Good afternoon and welcome and thank you for joining this discussion on ethical finance, which today we've dubbed as the ultimate act of climate activism. So before we start and introduce the topic and the panel, there's some housekeeping to do. My name's Paul Pizzala and I'm the Senior Investment Manager at Ethex, the direct impact platform for ethical investors that drives positive action. The session will last for around 45 minutes of Q&A with the panel, and we do encourage you, the audience, to ask questions and pop them into the chat box. And then we will feed those questions into our panel of experts, and you can also take specific questions at the end. The panel session is recorded, and if you do need financial advice, please talk to an independent financial advisor. So we'll be talking about the need for greener finance options and give examples of positive impact that thinking and acting differently about money make. And all our panelists here today have some role in the world of money and green finance and impact and climate change, which we'll go on to discover more about. And the big question is, can you be a climate activist with your savings? And can your finances be the biggest asset in working for positive climate change? We're not just talking about millionaires, foundations, institutions, and big money, although of course they are important. We're going to look at what everyday people can also do to make greener choices with their money too, just as you would with your cars and your shopping, and how by collectively moving our money, we can together make people sit up and take notice, creating tangible and lasting systems change. So specifically, some of the areas that our panel have expertise in is how the current financial system fuels climate change, ways people can understand what their money is funding, understanding and assessing the impact of your money. What are the basic greener options, opportunities to invest to do good? How do you actually go from wanting to make greener choices to actually doing it? How accessible is impact investing, both direct and indirect? And we'll look at examples of success. So you've got David, Annika, Kelly, and Robert, or should that be Anika? Sorry, I'll let you pronounce your name shortly. So panel, please do start by introducing yourselves, your organization, and what you do. So we'll start off with you, Kelly.
Hi everyone, I'm Kelly Shields and I'm the campaign manager of the banking standards team at Share Action. So Share Action is a responsible investment NGO, and we're working to try and make the financial system work for people and planet. And my role is specifically working on the top European banks and trying to improve their climate standards and try and keep sort of fossil fuels in the ground. Thanks, Paul.
Fantastic. So why don't we just sort of jump around popcorn style? Who wants to go next?
I can jump in. I'm David Hayman. I'm the campaign director at an organization called Make My Money Matter. And we're all about helping people through sessions like this understand the links between our money and climate change, and getting people to think, when they think about taking actions to make a difference in the world around them, when they think about eating less meat or flying less or recycling our clothes, but very few people think about the impact of the money on the world around them. And we're all about raising awareness, driving action, and ultimately, very similar to what Kelly was talking about, putting pressure on big financial institutions to invest more sustainably, because that's how we think, to the answer to your question right at the start, that we can have some of the biggest impact as individuals and collectively on climate change.
Fantastic. Thanks, David. Robert.
Hi, I'm Robert. I've got two hats on. I'm the founder of Solar Options for Schools, that developed a platform to enable investors and schools to come together to put solar panels on their roofs. And I'm also director of Solar for Schools CBS, which is a not-for-profit fund that collects or enables individuals to invest relatively small amounts of money into those projects on those schools. Yeah, and I'll tell you a bit more about how it works and why we do it later.
Brilliant. Thank you.
And my name's Annika, and I lead Money Movers, and we're a movement of women moving their money for the planet through harnessing the power of peer support. So in practice, we bring women together and train them up to bring their friends, their neighbours, their colleagues together to both learn about green finances and then actually support each other to move their money. So taking the kind of good intention of I've learned that my money's powerful and I want to do something, and then it's giving them a kind of support system so that they can actually do the nuts and bolts of transforming their money to make it greener.
Brilliant. Fantastic. Well, there you go. So that's a panel. And we're going to kick off maybe with a sort of a macro, big picture discussion on the UK banking and investment industry, and specifically, why and how is that fueling climate change? And if I may ask David to kick off on that question, please.
Sure, and maybe I'll start and spend a bit of time on pensions, and Kelly can jump in and correct me on banks because she is far wiser and more experienced there. But from a pensions industry perspective, there's £3 trillion invested in UK pensions. It's an extraordinary amount of money, and that money isn't private finance. That doesn't belong to super wealthy individuals. That belongs to every one of us. Anyone who's got a pension is contributing to that £3 trillion figure, and that money is ours, and it's designed to invest for building a better future for all of us, so we can retire with financial comfort and security. But the reality is, given how it is currently being invested, that money is not in fact building a healthy retirement for us, but it's invested in ways which are ultimately damaging the planet and making a healthy, stable retirement for us much less likely. And so what we try and do as a campaign is help raise awareness of the links between that money and climate change. Right now, there's a real disconnect between how people engage with everyday lifestyle actions like clothes, food, travel, and how they engage with their pensions. Most people think pensions are scary, inert, static, maybe sat in a bank vault somewhere in Switzerland accruing money, and if they're lucky in 40 years' time, they might draw down on some of that. But the reality is that £3 trillion is invested all around us for better and for worse. And the lack of knowledge and lack of awareness about where that money goes leads to big contradictions. It leads to situations where you have doctors who are invested heavily in the tobacco industry. You lead to vegans who are invested in factory farming, and it leads to climate campaigners or people caring about the world around them who are invested in many of the companies they are campaigning against through their pensions. So there's this kind of accidental hypocrisy or dichotomy going on between our lifestyle choices and beliefs and our money, and that is ultimately jeopardizing our future. And we've done a series of pieces of research at our campaign to kind of help quantify this. And I want to share kind of 3 facts about which show the size and scale of problem, but also the opportunity. We did a piece of research last year which showed that about £300 billion of the UK pensions industry, so about a tenth of that 3 trillion figure, is linked to companies driving deforestation around the world. Deforestation, one of the biggest drivers of climate change and climate catastrophe, and it's our money which is contributing to the companies driving deforestation. So there's a big chunk of money going towards deforestation. We did another piece of research this year which showed that about £88 billion of the UK pension industry is going towards the fossil fuel oil and gas companies. And that's to many companies who are not just currently developing oil and gas, but are expanding operations, who are rolling back on their climate targets, who are cutting their investments in renewable energies as well. So this isn't a nice idealistic vision where we're investing our money in companies which are transitioning and it's all going to be okay. We're actually investing in the companies which are going to be taking us way beyond 1.5 degrees. So it shows that lots of our money is currently going to these kind of investments. Just put on fossil fuels alone, it's about £3,000 per pension in the UK in the fossil fuel industry. And there's a gap in knowledge and awareness around this. But we've also done research which shows that if you take action on this agenda, if you move your money from a default standard pension where most people find themselves to a more sustainable, greener fund, that can cut your carbon footprint 21 times more than giving up flying, becoming a vegetarian, and recycling combined. So we think there's a real, whilst there's a problem right now, there's also a huge opportunity if we as individuals and we collectively start putting pressure and making more proactive decisions about where that money goes, that we can have a really positive impact on the world around us.
Yeah, brilliant. Great answer, David. Really great answer to kick off with. I saw lots of nodding coming from the panel. Robert?
Yeah, just dying to can you sort of mention one or two better pensions that we should be putting our money into?
Yeah, you put me on the spot here because we're really careful not to give financial advice, and we're not legally regulated to be giving advice and telling people where to put their money. But what we can do is maybe after this, or I can put in the chat some rankings which have come out by people like Good With Money, who have done a kind of top 6, top 10 ethical pension funds in the UK. I can share that. And what I'd love to share in January is we are currently doing a climate action report, which looks at the top 20 DC schemes, the biggest kind of worker schemes in the UK. And we're going to be ranking them against 5 different climate metrics, from deforestation to fossil fuel investments to stewardship to investing in climate solutions. We'll be ranking each of those schemes and we'll be putting that out publicly. So again, we're not trying to recommend particular funds, but we are trying to shine a light on where there's really good progress and where those are falling behind.
Yeah, a ranking based purely on the sort of CO2 impact, I guess, would be not a recommendation, but at least a ranking that would be very useful. Thank you.
Yeah, and a couple of things to follow up on that. The 21 times the impact that investing, let's say, wisely and with awareness about your pension, rather than having a passive engagement, having an active engagement by thinking about getting the figures and understanding what your pension is actually driving. It's 21 times more effective than becoming a vegetarian or not flying. That's something I've heard you quote before, Annika. Do you want to pick up on that point?
I mean, I've absolutely been quoting the Make My Money Matter research, and it's just such a powerful statistic. So many of us don't know that our pensions could be doing so much better for the planet and for people around us. And exactly as David said, like, I think a lot of people go around kind of thinking their pension is something that is not something they can do anything about. Like, before learning about some of this, I didn't even realize you could have different options within your pension, because that's how little I used to engage with my pension. And so that awareness piece that I think lots of folks are doing really good campaigning on is really pivotal in helping everyday people realize that they do have power and they do have agency.
Yeah, brilliant. So it's driving the awareness and getting the information out there. Kelly, you're sort of doing a similar analysis in the banking world. Can you tell us what that looks like?
Yeah, certainly. So we specifically focus on banks, and there's banks, again, are just like pensions. There's a huge amount that they finance into fossil fuels and sort of other dubious activities. And people, I guess, don't know when they're looking at their high street banks, like, it's hard to sort of rank these and sort of see how much different banks are actually doing that. But people are often surprised to hear that Barclays is the #1 financer of fossil fuels in Europe, and HSBC is very close behind. So, you know, we often look at our banks and think, you know, which one could give me the best rate and which has the best account. But really, we should start looking at our banks and thinking, you know, which ones are putting the most money into industries that I'm not happy with and that are, you know, causing the climate crisis. So I think, yeah, something that people don't really think about much. And there's, yeah, rankings and research that Share Action does on this, but also lots of other organizations. It's a real growing trend. There's more and more visibility on sort of where your bank is putting your money.
Yeah, brilliant. So how can the you know, the everyday person, how can they access this information and then go about making a decision and doing something? I mean, is it difficult? Is it easy? Can you do it on the internet?
Yeah, good question. So firstly, I just wanted to point out that people really don't get anywhere near enough information on how their pension, their bank, or their insurance company are actually investing their money. We actually recently did some public polling, and it is clear that the public do actually have a strong moral compass on how their money is being invested. So yeah, this poll was a YouGov poll. It looked at 2,000 British adults, and it examined public attitudes to how investment decisions are made by financial institutions. And what we found was maybe not surprising to people on this call, but actually maybe surprising if you think like the wider public. But we found that over half of people were interested in receiving more information about how their financial service providers were investing their money. And actually a majority, 83%, said they only knew a little or nothing about where their money was actually being invested. But then, you know, a lot, like over 73% of respondents believe that environmental and social issues should be considered alongside profits. So that was a really kind of key finding and one that's driving our work. And interestingly, 68% actually would look at their financial provider more negatively if they knew that they were investing in businesses involved in deforestation and damaging the environment. So these type of things should be a wake-up call to the financial sector to switch to more socially and environmentally sustainable investment that aligns with what the public expects. But yeah, unfortunately, we're sort of not there yet, and there's perhaps not enough pressure on these institutions to really sort of follow through on those on the wants of the public. So yeah, there's lots of ways that you can raise awareness of this. Firstly, people often don't know how much power they can actually have with their financial, with the power of finance. So first, like by owning just one share in a company, this actually gives you access to an extraordinary amount of power. You can actually attend a company's AGM, their annual general meeting, and ask a question directly to the board. So that's something that Share Action helps people do across a wide range of companies and a wide range of issues. You can go along to an AGM and really kind of ask the question and challenge the board on how the company is acting. And also it allows you to get involved in other things such as, you know, filing a shareholder resolution and putting a lot of pressure on a company to change their ways. And really, I just say that, yeah, as people that care about ethical finance on this call, you can really help spread the word by sharing interesting news articles and sharing reports that highlight the power of personal finance and show that people really care about how their money is used.
Yeah, Rob, sorry, you're going to say?
Yeah, I just sort of shared a screenshot of a ranking produced by, I think it's called mymothertree.com, from all the way from Barclays down to Triodos. And what I found fascinating when I first came across this graph is the difference. So what they've done is they've worked out what the carbon footprint is of all their investments, i.e. basically where your money is sitting in where they've lent money to, or what the carbon footprint is of all their borrowers. And the difference is 2 tons between £10,000 invested in Barclays and £10,000 invested in Triodos, according to their methodology. So simply by moving from Barclays, moving £10,000 from Barclays to Triodos, you've knocked 2 tons out of the system, which is extraordinary, given it's quite easy to move a bank account. Now, what I haven't done, and I'm sorry, I didn't check what the latest interest rates are on Barclays and Triodos. I suspect Barclays can probably afford, or should be able to afford, a slightly higher rate of interest, because quite frankly, fossil fuels are more profitable than the average renewable project out there. And it's interesting that when we're trying to finance some of our projects, we're starting to approach banks. Barclays won't even look at us. Yeah, we're just too small. Triodos is gone out of their way to try and make some funding available to us. And they're just trying so much harder. And if enough people pull out of Barclays and push into Triodos, Triodos will be able to fund more projects like ours, but also Barclays might start trying a bit harder to fund renewable projects rather than carbon-fueled businesses.
Yeah, some very good points in there, I think, about awareness, information, accessibility, ease of access and change. I mean, I recently changed my bank account to Nationwide. I'm not sure whether that fits.
It's in the top best 3.
Well, there you go. But it's I'm not sure if we're all aware how banking works, but banks, they collect deposits from their customers. And those deposits are used, they're multiplied. So it really drives the ability for banks to lend. So by putting your money in a Nationwide or a Triodos, banks that don't fund fossil fuels look for social enterprises, organizations like Roberts, Solar for Schools, actually enables them and empowers them to be able to develop and finance the type of economy that we want to see. So really actually quite a powerful mechanism.
Yeah, and if I could just add, I think on the banking side of things, it's actually much more straightforward to A, see who's better and who's worse, and B, move banks. And there is like a really helpful switching service, and you can move it in a week, and it can set up all your direct debits and transfer them over. You can see that Triodos is better than Barclays on fossil fuel funding and other issues. There's a great article from which came out recently, which looked at the 10 UK or 15 UK high street banks and showed who does what. And I would really recommend people doing that. And I think there's real value in that. It's empowering for you. You can have real impact doing that. But I think also what's really important is thinking about changing the culture around how we think about banks and getting individuals to take action, getting organizations, businesses, NGOs, universities thinking about their banking choices too. Because as much as it's great if I move my fairly small Barclays account into a fairly small Triodos account, what they really listen to, and I think which can really drive change in addition to the public, is big corporate customers. So your businesses, your universities, and your NGOs saying, we're going to make efforts to align our company banking choices with our sustainability strategy as well. And like an individual, most individuals are fairly uninformed about the links between money and climate change. That translates to organizations as well. We've done surveys which show that on the pension side of things, 95% of FTSE 100 companies have got a sustainability plan. Just 5% of them mention pensions, despite the fact they're investing 20 billion every year through their company pensions into companies which are contradicting their sustainability plans. So if you can get your organization you work for, or organizations within your society, organizations you partner with, to be thinking about this, to be taking action, be that changing bank or at least lobbying their bank to change, then I think that impact can also be really significant.
Yeah, fantastic. Annika.
Yeah, and on that, I'd say that I just shout out that NCVO launched a campaign earlier this year called Fueling Positive Change, which is all about getting charities to divest from fossil fuels. And I think that's really, a lot of us support charities and wouldn't ever really think about what is that charity then supporting when it comes to how they're using their money. I think you were asking the question about how can everyday people understand and assess the environmental impact. And I think people in the panel and also in the chat have suggested some really good sites to look at, such as Switch It Green's banking website. The Good With Money site rates different providers on a regular basis. Economy of Good have got lots of really fantastic YouTube videos interviewing specific companies. An ethical consumer does ratings on different companies with different factors. So there's that kind of information out there, but I would also really encourage people to ask questions of their own providers. So, for example, pension providers have a duty to give you information about where your money is going. And yet lots of people within the pensions industry feel or say that customers aren't interested. They don't feel they are finding customer engagement a challenge. So even just a few customers sending emails to ask questions can indicate that customers and consumers do really care about the environmental impact of their investments. And actually, some of the providers out there have really good tools on their websites and in their apps. And so, for example, the Nest app, the Nest website, you can, in a few clicks, see where your money is being invested. That's not the case across the board, but actually, even a few people trying to find the information, and when they can't, asking questions is a really powerful way of demonstrating that we as consumers really care about where our money is being invested.
Yeah.
I just love to sort of second that and sort of say, from our long-standing work with pension providers, we have actually at times heard from senior people at the pension providers that they have heard of a growth in customers actually getting in touch and asking about that. So yeah, you might feel it's a very small act, you just sending one email or having one phone call, but if a lot of people start doing this more and more, it really does get up to the top levels of the pension fund, and they do then start taking notice and thinking that they need to do more.
Absolutely, I would mirror that too. So one of the challenges we have at the moment, we're going from we've done about 150 schools so far. Most of those have been funded through crowdfunding, so through individuals who've invested as little as £500 to enable these projects to happen. We're now getting to the point we've got another 100 schools in our waiting list, which is about £8 million of investment. That's a little bit too big to rely on individuals putting £250, £500 in. I just need a huge number of individuals to put £500 in, but we're collecting that money, and maybe some of you might want to do that too. We're trying very hard to make it as safe as possible compared to leaving it in a bank account. But yes, it is less flexible and a little bit more risky than leaving it in a bank account. So I guess at least if you want it safe, move from Barclays to Triodos. You want to go to the next level, start investing it directly to help projects like Solar for Schools grow. And the reason that's important is not just because you're funding that particular school, but because you're allowing us to get to a size where pension funds will start to invest in this. So one of the challenges both banks and pension funds have on renewable projects is that most renewable projects are relatively small in compared to sort of financing a very large new refinery plant, right? That's sort of billions. Banks rub their hands in glee on a nice big juicy project like that. We turn up and we're saying, we'd like to fund £5 million of projects on the next 50 schools. And they go, 5 million, is that it? Come back to us when you've got 20 million of projects. So one of the challenges we've got when approaching pension funds is their minimum ticket size is quite high. And it's getting worse because pension funds, for example, council pension funds are being forced to aggregate into sort of even bigger distributions. And then when they get bigger, they will just blow even more money every year. And that means that their minimum ticket size is now sort of 20 or 30 million. Yeah. So one of the things that everyone can do is write to their pension funds and go, well, look, do your big investments, but put some money aside to do smaller investments in renewable projects, local renewable projects. And what's interesting is a lot of the pension funds come to us and go, wow, we love what you're doing. And I'll explain a little bit more about what we're doing in a minute. But they're kind of like, have got their hands tied, and they kind of would like to help us, but they kind of need a stick to sort of beat the people who are sort of forcing them to do big projects centrally rather than small local projects. So writing to them gives them some of that ammunition. So absolutely write to your pension fund. Someone mentioned about the teachers' pension fund. I mean, it'd be completely obvious for the teachers' pension fund to invest in schools to reduce their costs, right? It'd be totally obvious. But if I write to the teachers' fund and say, we'd like 5 million, they go, well, come back to us when you've got 50 million of projects. So that's the other place you can help. Is there are 30,000 schools in Great Britain. Collectively, it's about a £2 billion investment to put solar panels on all of them. Plenty big enough for even the most scale-resistant pension fund. But in order to get that volume, we need more schools to sign up. And if anyone's a governor in a school, please look into this, because the biggest resistance we have is when one governor in a school goes, oh, I'm not sure about this. Yeah, I understand the poor governor. The governor's there, is responsible for the school, but doesn't actually get anything from it. If he makes a decision that's wrong, it will be on their neck. But please do research the options to decarbonize your school, because there are a number of options out there to help save money and decarbonize the school that are very low risk to those schools. So explore them, find them, and implement them, because if we create more volume of schools going solar, it creates an asset class that pension funds can then fund. So I'm sort of slight rant here, but it's a sort of a kind of chicken and egg situation. Pension funds would gladly probably do more renewable projects if they had more renewable projects of the right size. Okay? And conversely, in order to create enough local renewable projects that they can invest in, we need to get, in our case, far more schools saying yes, so that we build a big enough volume so that we're attractive to pension funds. So there's two places you can place pressure. Talk to the pension funds to reduce the hurdle, and banks the same. Or if you know a school or are involved with a council or a trust, encourage them to see how they can decarbonize through a funded mechanism that will ultimately be funded by a pension fund. Sorry, and now maybe I should pause for a second and maybe explain what we do.
Thank you, Robert. Thank you. I'm going to come back and I'm going to pick up on talking about direct impact and indirect impact, and what's the bridge and what does it mean and how do I think about it and how do I measure my impact. But before we do that, and sort of picking up on your point, actually, there's a question from Kaz, which I'm going to introduce to the panel. So Kaz asks, I work for a big uni, and when I ask them why they invest in Shell when it contradicts their sustainability goals, I was told that they do it so they have a say as a shareholder. I'm not really sure what questions to ask or how to go about making sure they are actually trying to make a positive change with these kinds of investments. But I don't feel comfortable in just taking their word for it, exclamation mark. So something about engagement. What does it mean? What are the questions I should be asking? Does it work? Is it another strategy in a range of options that people have to generate momentum for change?
I can maybe jump in here because this is you've brought up, Kaz, a really good point and a very big kind of debate. So there's kind of two sides of the coin, which is engagement versus divestment. And obviously engagement is you do stay invested and you're using your investment to kind of carry on pushing the company to do well. Or the other kind of side of the coin is no, you just have to divest and kind of say that's it. Where Share Action sits, and I think quite a few others, is sort of there needs to be a hybrid of the two. Like, yes, it's great, and we do want companies ultimately to get out of those polluting industries, but unfortunately the way we are at the world now is that if everyone if all the pension funds, if all the organizations completely divest, at the moment there's not enough scale in that it would actually stop those companies getting the investment. There's too many other companies there willing to provide investment, and those ones aren't the ones that are then going to challenge those companies to change. So that's why engagement can also be useful, because it means that pension funds and asset managers and these organizations can really engage with a Shell, a BP, and sort of say, we want you to decarbonize faster. We want you to change your business and focus on renewables and stop oil and gas expansion and that type of thing. But the real problem with that is that what we're seeing across the industry at the moment is that engagement is nowhere near strong enough. So pension funds, asset managers, they're saying they're engaging. Oh, we're speaking to Shell, we're trying to get them to change. But what they're not doing is having a strong enough escalation path and really going, we will give you 1 year to do X, Y, Z. If you do not do that, we will file a shareholder resolution, or we will do a next step. And then the last step always has to be divestment. And if you do not take this action by this time, we will divest, and hopefully do that, maybe en masse, which would have a bigger impact. So that's one of the things that Share Action has identified as a big problem in our work, in our kind of research into asset managers and how they vote, and also, you know, just how they perform and what their stewardship and engagement practices are. And so we are in the process of sort of developing frameworks for what successful escalation and engagement should look like. And our kind of key thing from that is that there should always be a divestment aspect to it, and that should be time bound and, you know, be on the agenda. So yeah, it's a really good question. I guess coming back to you, I think it's asking then questions like linking to that. So you could be asking, you know, your university, well, what exactly are you doing to engage with Shell? When have you set that they need to achieve these goals by? And, you know, at what point will you divest from them? Those are the type of questions you could kind of ask to help in that process.
Annika, I saw you nodding.
Yeah, absolutely. Just agreeing with everything Kelly said there. And I think something that I would say to you, Kaz, is that asking these questions on your own and even figuring out what the right questions are, finding out what's going on with how the university are engaging, doing it on your own is hard. And so I'm a big advocate for peer learning and peer action, which is what we do at Money Movers. And I would say if you can find other people who are asking these questions together, you can both have more power when you're asking the questions, but you can also divide and conquer the idea of digesting the information, because it's not super straightforward. You know, they will have stock answers that they've been given, and sometimes these answers are designed to confuse people. And so I would say really divide and conquer the kind of information and the digestion, and then grow the power that you have by coming together with others who also care about this. And big universities, there is no shortage of people who do care about climate change and are actually just really have a real appetite for things to get involved in that can feel like they're actually making a difference. I think people have realized that the kind of individual actions that don't have that greater link to the systemic change are kind of not going to be the thing that really drives us towards a positive future.
Great. So see you nodding away there, David. I'm going to cut. You've got something to say, then do jump in. Otherwise, I'll go down a slightly different path and come back to Robert and talk about direct impact investing. But before I ask that question, question for David, actually, you know, how accessible are green funds and investments? We sort of touched on that topic already a little bit, but, you know, are there barriers? Is it complicated? Is it easy? Is it safe? Does it perform? You know, how do I think about all those questions? Do I need an advisor? Can I do it myself? What does it look like?
Yeah, I mean, lots of questions, lots in there, and I'm not a financial advisor, so to caveat anything that comes out of my mouth now with that. I mean, I think on the banking side of things, as I mentioned, I would say that's slightly more straightforward on an individual basis to look at who's doing what, who's having a more impact-orientated approach to their management of money, your money in general, making the switch. You know, you can see who's good, bad, and ugly. There's a service and a process to do it. It can take a week. It's relatively straightforward, and my experience, relatively risk-free, simple, clean, and a positive step to take. I think on the pension side of things, again, transparency is a real problem. Transparency both of where your money is going and then of the impact that money's having. And I think we're going to get onto a conversation about impact investing in a minute, you mentioned, but I think what I would encourage everyone to think is that all investments are impact investments. All investments have an impact, be they good or bad, and trying to understand the kind of cumulative impact of where your money's going and the impact it's having can be really, really difficult. So it's hard to find out the top 20 businesses your money's going into. It's hard to then understand the impact that's having. So I think there's definitely some problems around transparency, accessibility, quality of information. But having said that, I think, like I was talking about, there are definitely some reports out there, some guidance from the websites that have been mentioned, which will help you navigate around kind of helping to select which pension funds may be better or worse on that agenda. So I think, again, that's improving. And as we've all talked about, the more we can ask the questions, the more we can demand better services and quality from our pension schemes, the more we can shine a spotlight on the pensions industry as a key player in tackling or contributing to the climate crisis. The better information there'll be, the better products and services will be offered, the more transparency you'll have. And then on the investment side of things, I think this is where, this isn't money in a pension or money in your bank account. This is your money that you're taking deliberate, proactive steps to invest for impact around. I think there are funds which are better and worse in terms of the impact they're creating. There are funds which are riskier or less risky in terms of where your money's going. So I wouldn't want to get into specifics, but what I would say is, I think Robert mentioned earlier that fossil fuels are more profitable than renewables. And I think that's right if you look in the last 12 months. But if you look before the war in Ukraine, that certainly wasn't the case. I really hope that in the next 5 years, as the fossil fuel industry recognizes the limitations of what it can produce, that it's actually going to be significantly less profitable, because it's going to be damaged by stranded assets. It's going to be facing government legislation. It's going to be facing pushback from customers, and the exact investments Robert's talking about on the flip side, I think, will be more profitable, more beneficial for the planet, more long-term, more sustainable in every way. So I think, just to say that whilst it may be a bit of an aspiration, I'd really think that if you're thinking as a long-term, thoughtful investor about where you want to put your money, is it the companies which will be going out of business in some form over the next 15 to 20 years, or is it the new organizations being set up to tackle the problems and exist for the next 50? And that's where I'd certainly rather be putting my money.
Good point. Thank you.
Great. Yeah, no, thanks for that. I mean, yes, it's sort of making a little bit of a pact with the devil, isn't it? Sort of investing in the oil industry. And so, Robert, direct impact, solar for schools. I mean, one of the things that I think is very powerful about direct investing or setting up a community renewable energy project or something like that is having, what's called active hope, actually being able to see something very tangible, whether it's in your school or your local community. Just the power of doing something, right? Can you talk about how the power of doing something engages kids and their parents?
Well, there's multiple angles to this. So, one, there are a growing number of local community energy groups, people who get together to try and create renewable projects or decarbonization projects locally. There's about 300 of them in the UK. Some of them are one or two people who are sort of starting to scratch their heads as to what to do, and others are well established, have full-time teams, and are doing a megawatt a year of projects. And so do look out if you want to sort of really get your hands, I was about to say dirty, but it's not, let's say clean. Then look out, go to Community Energy England and see what community energy groups are near you that you could join to try and create some of these projects. And that's really a sort of grassroots upwards. That's kind of the most direct involvement you can get. Go and find and create a project with a local community group, and then set up a funding structure like a community benefit society around it, set up a brochure or a bond offer, put it on the Ethex platform, which is brilliant for just that, and raise the money, build the projects, run the projects. That's really, really, really hands-on. Most people find that incredibly hard, and unfortunately, most of these large, small groups struggle. So one of the things that Solar Options for Schools does, that's one of my hats, is we picked one particular little niche, schools, and we built a whole lot of software around making it as easy as possible to help a school get across the line. And we're working to use that software with community energy groups around the country. We're working with about half a dozen so far. They then use our tools to sort of fast track the process of identifying a suitable project and fast track getting that local school across the line in terms of, okay, we understand how this works. We understand how it's not going to cost us anything to have solar panels. We're going to pay for the electricity from the solar panels at a lower rate than mains electricity. We're going to cut our carbon, and solar options for schools will then come in and do education to inspire and educate our kids on energy and decarbonization. And I'll come back to that piece because that's the most important piece later. But so one of our hats is we provide the tools to enable groups of people to be more effective in getting these projects across. So that's kind of the next level. Team up with someone who's done it before and act as a sort of gateway between us or the local community energy group and a school. So we have a number of individuals who've championed getting a school across the line. And I don't underemphasize how hard it is to get a school across the line. There's lots of people who need to say yes, and only one person needs to say no, and it doesn't happen. And I believe amongst the audience, we've got someone who was incredible at getting a school across the line. It took her a couple of years, but thanks to her efforts, that school now has solar and is now saving money. So that's another way you can get engaged. Just work with your local school. Most of us are parents. We probably know a local school. You can go along to the Solar for Schools website. I'll put the details in the chat in a minute, and you can look up your school and you can see what its potential would be for solar panels. And then you can talk to the school, and we can then take over that conversation with them because it is a tough conversation. You'll need us alongside you to get them across the line. And then that becomes a project. So that's one side. That's from the actively trying to get a project to happen. Then there's the other side, which might be a little bit easier, and most of you might prefer, which is we also need to fund those projects. And that's the other hat. The Solar for Schools CBS is a not-for-profit community benefit society set up specifically for schools. Its members are the schools. Any profits that get built up or accumulated within that go back to the schools. And this is important for two reasons. One, these schools have to sign a 25-year agreement. That's really quite scary for them. But if they're signing that agreement with a community of other schools that they are part of the governance of, yeah, they can elect the directors of it. That gives them some certain security. We then manage that from an operational point of view. We do all the invoicing, the billing, the monitoring, the reporting, and the education piece. And where I'm heading with that one is that we've tried to make it as risk-free as possible to support and invest in a school. So rather than investing in a single school, you're investing in a pool of schools. Schools are relatively safe because they tend to pay their bills. They rarely go bust. They do shut down occasionally. Yeah, and we factor that into our financial model. They do re-roof occasionally. We factor that into the financial model. But compared to putting solar panels on a warehouse, it's a pretty safe investment. Not guaranteed, but it's a pretty safe investment. And we've done enough of them to have a pretty good track record in that. But the most valuable reason as to why you might want to invest some of your money in a project on a school rather than any other building is the education piece. And the direct CO2 savings from putting solar panels on a school are, in my opinion, between 1/10 and 1/100 of the total carbon impact or decarbonization impact because of the education. And our view is that most of our generation don't really know what they need to do. And I mean, this session is a really good example. I've made a mental note of having a new education module around how to persuade your parents to move their money from Barclays to Triodos or whatever. But they have children care about the future. They're very scared about it, actually. They have the time to learn about it, and they are the most powerful influencers of their parents. We can't change our generation's behavior unless they want to, but our kids can. They just need to know what it is that they need to tell their parents. So that's one of the objectives that Solar for Schools has, and that's the main driver behind it. We want to provide energy and decarbonization education to every young person in the world. And given that most schools around the world are struggling to fund maths and basic literacy, using the sun to fund that education is a bit of a no-brainer. And that's where the real impact comes from. So yeah, I gave up my well-paid job 10 years ago to set up Solar for Schools because I just love the concept of using the sun to empower young people to pester their parents to do the right thing. And there are 2 billion young people around the world. they only have to persuade 3 adults, 2 parents and a grandparent, to cover the entire population. And then we can start making a difference. So if we can then start teaching children, for example, about persuading their parents to move their bank account, that will make a difference. If children understand why we probably need a carbon tax, then their parents will vote for politicians who will enact a carbon tax. Yeah. And multiple examples. I mean, the flying less, the eating less meat, and the electric vehicle are the obvious ones.
Yeah,
all the other ones that go with it.
It's a real children are the change agent, or a key change agent is what we're saying. And Solar for Schools and other organizations like that that's a real sort of way, a mechanism for having very direct impact on, you know, my generation, my parents' generation, and so on and so forth. And Annika, I saw you sort of like nodding away. So have you got some thoughts, insights, something to say?
I think just hearing Robert talk about the potential for what your money can be used for is exciting. And I think one of the things that I think someone in the chat was asking about, how do we get everyday people caring about this, not just those in the know? And I think there is a perception of the kind of ABCs of money, that money is abstract, boring, complex. And sometimes it is. But actually, when we focus on what our money could be doing and could be unlocking, you find that people are much more interested in the potential power that they have without even realizing it. And I think there's a really big question that we look at Money Movers, which is, how do you go from people wanting to make greener choices to actually supporting them to do it? And I think lots of us have good intentions when it comes to climate action. You know, I think we're trying our best, but we have really busy lives. There are busy schedules and all sorts of things to be thinking about. And finding time to actually look at your money when it feels abstract, boring, and complex can feel really hard. And so that's why at Money Movers, we have this model of peer support. So the idea that you can gather a group of people, it could be just 2 or 3 people, or it could be 10 people from your neighborhood, from your community, from your workplace, to discuss these topics and help keep you accountable and supported. And I think what we found is that people find these sessions fun. You know, they have pensions and pizza evenings. They find it interesting to actually go under the hood of what's actually happening with their money. But I think a really crucial ingredient is that we have a coaching approach. So in our Money Movers sessions, we don't have anyone being the expert, the teacher. No one's there lecturing or preaching at you. No one has all of the answers. The idea is that everybody is learning together, and we all have the ability to spend 5, 10, 15 minutes Googling something. And as I said before, that kind of divide and conquer approach as to kind of really getting into the details of this is really powerful. And then the other piece of what we do is, as part of the program, women host Get Stuff Done sessions, where you literally get together, carve out the time, make an intention at the beginning of, say, an hour, and then spend 45 minutes either looking into switching your bank account, or finding out what your pension company is doing, or researching greenwashing. And then you come back at the end of that hour and share what you've learned. And what we find is carving out the time together is so simple, but it's such a powerful catalyst for action. And then the final thing I'd say is that if you don't have a group around you, even just finding one person to talk about this with can keep this on your radar when life just gets in the way, which it inevitably does. And what we've found is that sharing an intention out loud, even with just one person, is a really incredible driver for actually supporting you to take those steps to move your money towards things that are good for the planet and good for people, rather than towards things that are destroying the only home that we have.
Brilliant. Awesome answer. So much positive energy that we can gather together.
This is the 21st century of a book club, right? We should sort of ethical share clubs. I love it. Great.
We're sort of,
one other final point I was just trying to think about, the sort of level of effort versus level of impact versus return, right? And so, I mean, moving from Barclays to, I haven't looked up again, I think Barclays offering about 5%, right? If you move to Triodos is offering, I'm just looking now, 4.5%, right? Triodos is going to lend the money to us, assuming we get through the very expensive due diligence process and huge upheaval to borrow some money directly from Triodos. It's going to charge us 2% more than that. Yeah. And actually, most banks charge 3%. So Triodos is really making an effort. So the 2% spread between what we're paying Triodos and what Triodos is paying you. So for that 2% difference, it might be worth spending a little bit of time heading over to the Ethex website and having a look at our current bond offer. And hopefully you might find it interesting enough and transparent enough for you to join us.
Thank you, Robert. Thanks for that. Thanks for that. So any final thoughts from David and Kelly before we sort of wend our way to the end of the session?
Yeah, I mean, I was just looking at the chat, and I think Penny's put a point about how we get this information out into the public domain and beyond a small bubble of people who are informed. And I mean, I'd hope that each of the organizations represented are showing different ways you can do that. And you know, I love what Annika and team at Money Movers are doing in terms of doing this small groups of peer support, coaching approach, you know, getting this into people who I'm sure, Annika, they're not your typical people who would normally be doing finance classes on a weekend with a slice of pizza, right? They're normal people who are starting to explore this stuff for the first time. I think that's brilliant. I think, you know, the work of Share Action as well is trying to empower everyday citizens to be activist investors by buying one share in a company. This isn't an elite exclusive thing. It's something that we can all do. I really hope what we're doing at Make My Money Matter is all about, in some ways, trying to make pensions fun and accessible and engaging and not scary and inert and distant. And by doing that, by getting businesses and NGOs involved, by getting celebrities involved, by making fun content which tells the story in slightly different ways. We've got a new advert coming out in a couple of weeks' time with a very high profile celebrity, all about the links between pensions and the fossil fuel industry. And it's something that is really trying to break down barriers and not just target the 5% of people who are environmentally active and conscious, but to make this about a real everyday thing for each and every one of us. So I hope you've got some examples of people and organizations trying to drive that. But the reality is it's a challenge, and everyone's got lots on their mind. There's lots going on. There's lots on the climate agenda right now, and needling money into that can be slightly difficult. But I think if you frame it in the huge potential and scale for impact, I think that's how you can really engage people.
Brilliant. Thanks, David. Kelly?
Yeah, I just wanted to pick up on the point Penny made as well around fiduciary duty. So a term that most people might not be aware of, but essentially it's the it's kind of the legality of how pensions funds act in their savers' best interests. And right now it is mostly interpreted as maximizing financial returns. So Share Action are really trying to kind of combat this, because as much as all the individual actions we can take, a really big thing that we need is reform, and we need policy reform. We need the government to take action on this as well. Obviously, you can take action as an individual on that by, you know, writing to your MP, getting involved in politics. That is an aspect too. But yeah, Share Action is running a campaign on fiduciary duty, because we really want to reform the rules to make sure that pension funds take your best interest into account. And that's also kind of the long-term future, because yeah, there's no point having a slightly bigger pension pot if your quality of life is much worse due to health problems or climate breakdown, because of what your pension fund is invested in. So yeah, just to shout out that we're trying to work on that on the regulation and policy level as well.
Thanks, Kelly. Well, I mean, I think it's just fantastic and brilliant that there's so many people who've turned up to Ethical Consumer. We're all in it together. We're all pulling together. We're all making a difference. You've heard that there are lots of things that you can do to inform yourselves, empower yourselves, make changes. So I would just like to thank our panelists and Ethical Consumer and our audience for this opportunity to get together and make a difference. So all that remains to be said is for the panelists to say their thanks, and we'll call it a wrap.
Thank you very much. I'm just putting in my contact details if anyone has any questions or wants to sort of help a school nearby. Happy to work with them and help any way I can. So thank you very much for your time, everybody. Fantastic session. I will create a new module in our education around ethical finance. Brilliant.
Thank you.
Thanks,
Cheers.
everybody.
Yeah.
Bye.
Cheers, guys. Thank you. Bye.